Hey, what's up guys? My name's Adam Moore and welcome to another video on the More Money Investing channel. Now today I have a huge play for you and I really think it's going to pay off, and it's going to coincide with everybody's favorite subject on the market right now, which is electric vehicles. Now it's not going to be NIO, it's not going to be Tesla, it's not even going to be an electric vehicle manufacturer itself. It's going to be a manufacturer of a component that goes in these electric vehicles, and how there's a shortage right now, and if you know anything about shortages, that's when the price drives up and we can make some money. So stick with me guys and I'll be right back with you. Alright guys, so today I think the big play is going to be Infineon Technologies. I think in the next couple months we could be seeing a huge growth of this company because there is a shortage in semiconductors in the industry, as I'll show you in an article just a bit later. But I want to go over Infineon's balance sheet and a little bit of their income statement just to give you some statistics on why I see value in this company. So one of the first things we want to look at when we're value investing is the current ratio. If you don't know what the current ratio is, it is basically how much cash they have on hand versus how much money they are going to owe in the short term. And if we go down to Infineon's current ratio, we see it is at a solid 2.08. Now what does that mean? Basically, for every $1 of liabilities that they owe in the short term, they have $2 in liquid assets that can be turned into cash on hand immediately. So they're looking really great and able to cover their short-term debts, and that's awesome news for a company that we want to see growth in for the future. And now, even in the last previous years, they were able to keep this current ratio pretty high and right around that 2.08 range, which is just awesome news to look at. And now we also need to check if the company is more or less profitable. And really what I want to look at is somewhere in a 5 to 10% range for profitability. And if we go down to Infineon's income statement itself, we can see that their gross profits are sitting at approximately just over 25% of their total revenue. Now that is not a bad thing to be seeing, but we don't want to do everything off of profits and current ratio. I just want to show that these are good indicators for the strength of the company going forward in the future. Alright guys, just another quick thing that I want to point out is that the year-over-year profits for Infineon also don't look too bad. So as we can see, before everything that was happening with COVID, they did have a steady increase in their gross profits. Now, I think 2020 is a very special exception because everything took a hit during the COVID-19 pandemic, and they still didn't fall off too much in their overall gross profits, which I see as a huge plus. And I believe that if they keep this going, we will see a huge percentage increase in 2021's gross profits. So again, I'm feeling pretty strongly about this company, and they are showing me a lot of reasons why to feel so strongly. Alright guys, so now that I've gone over a little bit on the balance sheet and the income statement, I want to take you to this article that really explains how the catalyst of this shortage is going to push the sales beyond anything that we've seen before, I believe. So looking at this article, and I hate to be this guy, but I'm just going to read it for you so we can go over it together, and then I'll break down exactly kind of what it means. So, German auto suppliers Continental said on Friday that a rebound in Chinese demand following a global slump in sales caused by COVID-19 is leading to a shortage of semiconductors that may cause a supply chain bottleneck until 2021. Although semiconductor manufacturers have responded to the unexpected demand with capacity expansions, the required additional volumes will only be available in 6 to 9 months. Therefore, the potential delivery bottlenecks may last into 2021. So what exactly does that mean? Well, basically, the companies that we see like Infineon or Continental, Infineon actually makes their chips for Continental, they are saying that they have been responding to these shortages, but it is going to take time. So companies that are going to react the best are the ones with the best current ratio and cash on hand, which, as we've already stated earlier, Infineon is doing incredible in those categories. So I believe that they will be able to be one of the first companies to react to this immediate increase in demand, and that they will be able to capitalize possibly the most on this type of bottleneck. I really do believe that everything we've looked at so far really supports the idea that Infineon is going to be one of those first companies to really expand and increase their sales volumes within the next year or so. Alright guys, so I bored you enough with statistics in this video, and I just kind of want to break it down to brass tacks on why I think this company is going to succeed in the coming months and years. And that is basically speed of reactivity. Now, I believe that all the manufacturers for semiconductors are going to somehow get a little piece of this pie as the shortage continues, but I really think Infineon is in a great position to capitalize more than anybody else. They have all the capital necessary to increase their manufacturing to a level that can meet the demands for these semiconductors. As we looked at with the current ratio and the profitability, they have the cash on hand to increase their liabilities while still having the assets to cover them. So basically what I'm saying is the sooner that a company is able to react to this shortage, the better. And in my opinion, Infineon is going to be the first one to react to this in the best way possible. Now, I just want to end this by saying I am not a financial advisor, so I think everybody should do their own research on this subject, but I just saw this little pebble on the ground and I had to share it with everybody I know. I am already buying shares, and I'm going to continue as we see whether it grows or drops in the coming months, but I have a lot of respect and faith in this company, and we will see how it goes. So if you guys enjoyed the video or learned anything, please like and subscribe, and I will see you on the next one.